Greetings, members, one and all of the Salivation Nation. Inflation is running hot. It has reached a 40-year high, and silver and gold are just kind of hanging out, anticipating what the Fed is going to do at their next meeting. Let's explore. Indeed, this is the title of the article we're looking at today from Kitco. Jim Wyckoff, gold sees modest price gains, and silver too, as U.S. inflation is running hot. Gold prices are modestly higher and erased slight overnight losses in early U.S. trading Friday. Really to be expected when you think about what is going on. There's a lot of things pushing and pulling in the markets, and we'll talk about those in a moment. So gold rallied a bit following U.S. inflation report that came in slightly hotter than expected. So in other words, we knew this was coming, but it's a little bit higher than what they thought. A higher U.S. dollar index and rising U.S. Treasury bond yields are limiting the upside for the metals. There's other things too that are limiting them as well. February gold was last up $4.30 at 1781.40, and March COMEX silver was last up about 5 cents at $22.07 an ounce. We'll look at the numbers here momentarily as we record this video and see what they are there. The just released U.S. data point of the week. The November Consumer Price Index report came in at up 0.8% and up 6.8% year on year. Now, that 0.8% for November is slower than we saw last month at 1%. Still, it's pretty close there. So some optimists, so to speak, in the administration and what have you, the modern monetary theorists will say, hey, at least it's slowing a little bit. It's not by that much, and it came in hotter. So the CPI report was expected to come up at 0.7% from November and up 6.7% year on year. Today's numbers are at a nearly 40-year high for U.S. inflation. Federal Reserve officials will be scrutinizing the CPI report very closely ahead of their FOMC monetary policy setting meeting next week. The Fed has recently done an about-face on inflation prospects, going from saying it's only transitory to now believing it's not just temporary and may even become problematic. Well, what they're going to try to do is spin it and say, well, inflation is less, it's slowing, but it's still in there, but they're going to say it's slowing if it's a tenth of a percentage point lower month to month than the previous month. And so that's kind of how they say they're fighting it, they're working against it, but it only takes another month for it to go even higher to where it gets to be a real problem. And we're going to see this thing run away from us, because this is kind of the beginning of runaway inflation. Global stock markets were mostly weaker in overnight trading. U.S. stock indexes are pointed towards firmer openings when the New York day session begins. Risk appetite has grown markedly this week, but after strong gains in the U.S. stock indexes earlier this week, the markets are seeing some normal pausing action late this week. It appears the Omicron variant has left the center stage of the marketplace. But as the holidays approach, the Delta strain of the coronavirus is still surging in parts of the U.S. And we know that there's other factors that occur too. Consumer spending is up. And that's not what was being discussed here so far. Outside markets see NYMEX crude oil prices higher and trading around $71.65 a barrel. And a lot of the prices falling over some time and the gas prices going down is not because of the Biden administration releasing 2 days worth of oil reserves into the marketplace. No, it's because the fears of the Omicron variant did not weigh out. So they're kind of pausing that. And so that means, the OPEC and other nations are flowing it out again and not holding back. And so therefore the prices have eased up a bit. Other U.S. economic data Includes real earnings and monthly Treasury budget statements and the University of Michigan Consumer Sentiment Survey. And then we get into some little bit of technical analysis here where things will go. We're going to avoid that for a moment and look at this article from Todd Bubba Horwitz, which gives some interesting insight on what he thinks about gold and silver. They can't seem to gain any footing as they struggle in the current consolidation pattern. The battle between the bulls and the bears at the 1760 to 1800 level in gold and 2180 and 2240 for silver has the appearance that the bears are going to take control once again. The metals look ready for a meltdown. It would be no surprise to see gold trade at $1,700 and silver at $21. We're actually pretty close to for silver right now. Platinum at $900. For now, the metals look bad and the sellers are ready to take charge. Obviously, these patterns can change without notice, but the action is ugly. But here's the key. We must remember, we are long-term bulls. All of us, not just him and the people at Kitco and his personal sphere of influence and what have you, but all of us, we stack for long-term wealth preservation. And that is what's happening. Now, you can trade the price action today if you can separate the two emotions, they say. But if you're going to trade on a day-to-day basis or a week-to-week basis, that's where you want to get into the ETFs. But even that's kind of risky. If you're going to get into ETF, gold and silver, you might as well be playing other hot stocks. Or you might as well invest in cryptos, in my feeling. Not that I'm against any of that, by the way. Not that there's anything wrong with that. But you get where I'm going with it. Physical silver and gold, you pay those premiums to hold it as wealth insurance, as insurance policy in general against economic instability. In all markets, price action determines what will happen the next day, week, or month. Keep the two strategies separate. The worst trade anyone can make is turning a trade into an investment, hoping for a way out. Traders must learn to take their losses and move on to the next trade. Patience, discipline, and money management always win the day. Being fiscally responsible and cautious and careful, for sure. Patience, perseverance, and there's another P that I mentioned in the other video yesterday. If you watched that video, let me know what that other P is, because I forgot it, and I'd be curious to see if you were watching, see if your memory is better than I am. So as we close out the market today and for this week, it is indeed true. Silver is struggling, but it is up 1% today. But that's pretty modest considering the news that came out. I'm going to talk a little bit about another reason why gold and silver aren't trading higher, because consumers are buying more goods, services. Why is that happening? Because of inflation. Think about it. If what you buy this month will cost you 1% more next month, wouldn't it be wise to buy it this month instead of next month? That's what's happening. That's why there's economic activity. That's why the job market is doing so well, because things need to be produced. Items need to be secure, but they're buying it for the wrong reasons. Well, they're buying it for the right reasons, but not for healthy reasons. In other words, for a healthy economy, that's for sure. So that's something that should be considered here when you look at economic activity. Why is that economic activity happening? For instance, when you see a huge supply of lumber in the form of particle board or plywood in New Orleans or in South Florida, and you say, oh, look at all these great plywood sales in New Orleans or in southern Louisiana or in Florida. Isn't that great? Oh, it's economic activity. No, it's not great. They're preparing for a disaster. They're preparing for a hurricane to come through. They're boarding up their windows. Or what we saw across American cities last year, the riots, the BLM riots. People buying all these boards, a lot of economic activity to try to protect people's stores and the like. In fact, I'm going to talk about another form of inflation, which is actually a very good thing in parts of California where it becomes a misdemeanor if you steal something and pretty much not prosecutable if it's under a couple $100 or maybe $1,000. So what one store owner did is he increased the prices on the shelves for everything to above that dollar amount I think it was like $900 and some dollars or whatever. And then you get a coupon, you get an automatic discount when you go to ring it up. So there you go. I think that was pretty clever. And so that's probably a good type of inflation to fight the crime, the smash and grabs that have been going on around the country. But gold and silver, those things, when you hold them in your hand, when you have them in your possession, the price is going to fluctuate on the markets. We know what premiums are doing. We understand that really they are working against what the paper markets are doing. They're up. But the sentiment in the paper markets is very different than the sentiment in the physical markets and where we are at with gold and silver. And especially silver's premiums through the roof. It's crazy. And there's reasons for that. And you've heard me talk about some of those before. Regardless, gold, silver, and to some extent platinum are ways to kind of help protect yourself against economic instability. So as we look at these prices and where they move today, a tepid response to high inflation, wait till next week. We'll see what the Fed says. We'll see what the reaction, because that's really the true unknown. These high inflation numbers were expected, and we'll see. Be prepared for lower prices for gold and silver and the spot price that you see here. Be prepared for higher premiums coming, and be prepared for what could happen in the next couple of months and into next year, well into next year. Be prepared for anything. If you hold gold and silver, do just that. Hold it. So there you go. I hope you found this video insightful and useful. If you did, let me know in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video. And I encourage you to please rate this video. That means to hit that little thumb up button, that's there right underneath the video. If you were to press that, it would be depressing, but in a new and exciting way. Make me depressed by pressing that thumbs up button. Share the video across all social media platforms, including TikTok. I don't know if you can even share anything on TikTok, but you can give it a shot. Comment, and after all of that is all said and done, if you haven't done so already, subscribe.